Tony. Good morning or good afternoon, depending upon where you are, I suppose, to everybody. This is um, part of our business plan from idea to action webinar series. This is the fourth and final session within that series, which is going to focus on the financial aspects of the business planning process. My name is Neil Abitabalo. I'm a certified mentor and presenter with SCORE. I've been with SCORE for about 5 years. So I welcome everybody. Uh, give you a bit of a commercial about SCORE. We're a nonprofit organization. Back in 1964, my recollection is it was a creation from a bunch of people who were retiring from the DuPont company in Delaware. And it's grown over the years. We have 10,000 mentors, 300 chapters. Tony and I are part of the Southeast New Jersey chapter. Tony is the chair of that chapter. And our geography is from Ocean County down through Cape May, New Jersey, and I'm actually physically in Cape May. We're available free of charge to help your business or a business as it starts, but also as the business progresses. We're not just available to help startups, and besides lots of industry experience and a pretty good range of functional experience, there's a lot of good online content available through the SCORE webpage. I think we'll get back into that a little bit later. As I mentioned, this is the fourth in a series of webinars on business planning. This is just an outline of the previous sections that we've had. So we've done an overview of the business planning process, and we talked about how to evaluate your business idea. Are you providing a solution to a problem? I refer to that as the Q&A section. So it's where we would ask lots of questions about our business or the potential to start a business and provide answers to those questions so we get an idea as to whether or not our business may be a go or a no-go. And you see that phrase continues in all the sessions. As we work to develop a business plan, we want to check every once in a while to make sure that we're still in a go mode for the business, or if it's a no-go, do we need to go back and readdress some of the issues and modify our initial thinking. The third one was research and analysis. I think an interesting topic. Where do you find information? How do you access information? What do you do with the information once you've compiled it? And that's focused primarily on really the marketing and sales aspect of the business. And our current session, which we're conducting today, is focused on financials. So that's financial feasibility, forecasting a little bit, financial statements, and we're going to talk a little bit about break-even analysis as well. This is where we need to estimate our costs, expenses, revenues, and try to come up with some cash flow estimates. And cash flow is ultimately the final go or no-go step. If you're not generating positive cash flow, then your business is likely a no-go, particularly if you're in the business with the aspect of, with the intention of making profit. So, where do we start here? So the most important thing is, what are the cash requirements for this business? So we want to identify those expenditures that we need to get the business started. That's a key thing. But also, even in businesses that ultimately are very successful, during the initial stages of the business, whether that's the first 3 months, 6 months, year, the business may be growing, may be positive, but it may still require additional cash. The business is not generating enough activity to become what we refer to as cash flow positive. So what are the other things that we're going to need from a cash flow standpoint to keep the business afloat until it goes from being kind of a cash drain to a generator of cash. And the next important part of this is how do we forecast our revenue, cost, expenses, not only for the startup of the business, but also as the business develops over time. We want to look at calculating a break-even analysis for the projected activity, and then also start to put together financial projections. I recommend we go forward at least 3 years, and this is to kind of gut check whether financially the business will be successful, but also if you're looking for some outside sourcing, whether that be from friends or from a bank or from a grant or from an equity participant, your financial projection will be very important. It'll tell the bank that, yes, I'll be able to repay this loan. It will communicate to the investor that after a period of time, you, Mr. Investor, and Mrs. Investor will see a return. And so that's important. And even if you're in the business by yourself and you're the sole source of funds, the plan projection will give you an indication of what the future cash requirements are and when you can start to see some sort of return, particularly if you're looking to take a salary or a draw from the business. Plan preparation, we've used this slide in probably all 4 of the sessions, but this is our checklist. We need to get the best understanding we can of what is our business. What are the products that we're selling, or what are the services that we're providing? There's a significant amount of, I've categorized everything as logistics, from actual logistics, where's the business going to be, down through registrations, what's your legal structure going to be, have some choices. Is this a business that has some value in a trade name or some technology that needs to be protected with patents? Web and social media, we can't underemphasize this. Very important. Everybody nowadays is looking to the web for information, to verify stuff, to do their purchasing review, and in fact, to process purchases, whether they be for goods or for services. Resources, what do we need? What kind of equipment, supplies? I would include inventory in that if you're in manufacturing or distribution business. And then do we have the ability and the skills and experience necessary to handle all of the aspects of this business, besides starting to keep records and looking at insurance? Do we need outside support? And that's the BAIL acronym there, which is down below, but also SCORE. We can be of value here, where we can provide advisory and consulting type services, mentoring, to help you with your business plan and you're going through your business checklist. What is a business plan? So it's a written document. There's lots of definitions of what this is, but primarily it's a written document, finds the goals of the business and the methods to achieve those. These are the questions that it should answer. Where are we now? Where do we want to go? What do we want to be when we grow up, sort of a thing? And how are we going to get there, and at what time schedule? What's our schedule? Are we going to work on this for the next 2 months? Are we going to work on this for the next year and a half? And when do we get to the point where the business is viable and can stand on its own? What resources in terms of help, other help, do we need? Do we need to bring in an accountant? Do we need to talk to an attorney? Do we need a banker? We need a real estate agent? Do we need an insurance agent? The most important part of this, I think, and particularly connected to what we're covering today, is how much is all of this going to cost? When is the cash outflow required? And do we have the ability to fund that on our own as the starter and the proprietor of the business? Or again, do we need to get some outside help? Um, and we have milestones, like we have an anticipation of particular goals that we want to achieve as we get into this business. And it's important to put some time frame around that. So we know by January 1st, 2024, just cut off the 20 years, that's pretty good. By 2024, where are we going to be? Are we going to be on target? And what do we expect the results to be? And then how do we measure those results? And primary way we measure those results is the financial statements surrounding the business activity. This is another slide that we've used in all four of our presentations, and it is sort of the jumble of a business plan process. I won't go item by item, but you can see there's many categories. There are lots of arrows which indicate, kind of do it again sort of activity. Um, and there was analysis, research, ideas, solutions. But the key thing is this a viable plan? Have we put together a business plan that is viable? Is it feasible? Will it be successful? And will it continue to exist? The sections of a business plan, you can read them here. Um, and our focus today is to talk about financials. And quite honestly, we've made the financial data that we'll see shortly rather simplistic. And that's to try to cover as much as we can and not get bogged down in too much detail. We didn't really want to make this a bookkeeping exercise, but we want to give people that are attending the webinar a sense of how to put the numbers together. So we'll get into that. The key section of the plan, and should always be mentioned, is the executive summary. This is our 90-second elevator speech. In comparison, this is what it becomes for the business plan. It should be short, a couple of pages. It should encompass and cover these items in a summary format. I suggest that the executive summary be prepared last. Get the rest of your plan put together, and then take that information and put it into a summary. In many cases, if you're looking for outside funding, if you reach the level of angel investors or investment bankers or private equity, and that may be for entities that are perhaps larger than our current audience will be involved in. But if you get to that point, many times that executive summary may be the only thing that's read from your plan, and a decision is made not to fund at that point, but whether or not this plan and this business idea will be further considered by that potential investor. So this executive summary is really selling your business to people who may fund your business. Okay, so in terms of the business or the description of the business, we've used three different scenarios in our webinar series. And today we're going to cover our small manufacturing business, which is cell phone cases. And we'll use that to develop some of the financial information. This is an outline of the cell phone business. And if any of the attendees have suggestions as to what else might be critical, they should maybe make comment on that. We can talk about that a little bit later on. So we're focusing this business on just cases for the latest iPhone model, which since this presentation was initially put together, and now we're up to 15, I believe. We're talking about good quality, great quality leather pouch or flap style. So it's more towards the higher end of cell phone cases. They're going to be stitched, hand stitched, and perhaps embossed or have some decals or some painting. And the concept is that they would be custom made or made to order for the most part. So even if we have, say, an envelope style leather case for the phone, and we may have a few of those in inventory, the final details will be pretty much made to whatever the customer is looking for. And our plan initially is we're going to sell these through Etsy. It's not that difficult to become a seller on Etsy. They charge a fee, of course, but it's a way for relatively low volume, uh, part-time business activity, which is how I'm envisioning this, can start to get into the market. And Etsy does have the capability for providing some customization on products. Okay, how do we reach a financial conclusion? There's an array of items here that are considered in the process of putting our business plan together. You can read them, and we're sort of in this gold zone, lower right-hand corner, where we want to determine whether or not this business can be successful. That is it a go or no go? And if it's a no go, is it something that we should reevaluate rather than just drop? And the way we're going to do that is by calculating and determining, what the financial posture of the business is. So now let's talk about some of the financial data. And again, I'm using the KISS principle here to keep it simple. So the first thing is let's look at what we need or estimate that we need to start this business. Primarily, it's going to be inventory. So we're manufacturing product and we need inventory to be able to do that. There's leather goods, there's rawhide stitching, paint, decals. Then we're going to need some equipment, a workbench, and some shelving. The workbench would include some hand tools, so we can basically sit at that workbench and produce these things. And then once we have orders and we start to fulfill those orders, we're going to need boxes and packaging materials to ship them out. So you can see that we're going to spend about $1,400, not a significant investment. And roughly half of that is for inventory, and half of that is going to be for equipment. So before we do anything, we have to have $1,370 available so from some source to be able to start. And now if we look at a financial estimate, again, we're only going to look at one period of time here, but the critical part of this is to be able to do these projections and go out for 3 years. At least 1 year should be by month. The second year may be by quarter, and maybe the third year is just an annual number. But we want to be able to have the details behind those. So if requested, we could provide 36 months of data, or maybe even 5 years sometimes. So here's our basic preliminary estimate of the financial situation. So we need a half a square foot of leather. We need some amount of rawhide stitching. We can see the cost here. This is for one case. We put in labor for 1 hour, and that's $30 for an hour is a fully loaded number. So that would include insurances, it would include benefits. It wouldn't necessarily be just the wage rate. It would be everything. And we have a subtotal, and that's all of our direct costs, and that's $51. When we sell a unit, we're going to incur packaging, put it in a box, and then we're going to ship it. So we have other costs. So our total costs are $70.50. For this kind of business, we're following sort of a guideline or practice in the industry, and that is these items generally have a markup of 50%. So that'll get us to a sell price of $105.75, which as a gut check, if you do some research, which I've done, I've certainly purchased enough phone cases myself where $105 is, not inexpensive, but for a really good quality leather case that's customized, it's not a bad price. We have our Etsy fee, which I'm estimating that we would fall into the structure where it would be about 6.5%. So every one that we sell, we have net revenue that's just under $99, and we have a margin, which is the $99 less the $70 of about 28 bucks. I've also put in an estimate here of fixed expenses per period of $1,000. Now, just by way of example, not necessarily the details of that thousand, but fixed expenses would be things like rent, facility costs, insurance, utility costs, salaries for people that are not directly involved in the manufacture. Um, and there's a lot of different categories of expenses that would go into fixed costs. But basically, these are the costs to operate the business independent of an activity level. So if I have $1,000 of fixed costs, that's a number that I have to cover every month. Presumably, when I sell no cases, if I have a month with no sales, or if I have a month where I'm selling 100 cases, I would still have the same level of fixed expense. So fixed, it doesn't vary by volume. My margin number, of course, will change based upon the number that I sell. And that's, simply a multiple. So if I sell 10 of them instead of $28 in margin, I'd have $283.80 worth of margin. You may have questions about this that also may be something to comment on. The first thing we want to look at is, with that limited bit of information, can we do an estimate for our break even? And break even is important as we think about when we stop putting cash into the business, and hopefully when we start to get some cash out of the business. So this is a simple schedule. The lines are rather thick, so visually we can see them, but it sort of doesn't help us when we try to pinpoint where that break even is. But nonetheless, the lines here are, the red line is the fixed expense. That's $1,000. Doesn't matter how many units for any period of business activity. Let's say it's a month, I'm going to incur $1,000 worth of fixed expense. My total cost, which is this grayish line, is the combination of the fixed expense and also the variable expense to make each unit or each case that I'm going to sell. And the bottom scale here is increments of 10. So the 2 is 20, the 5 is 50. And that break-even point is where my revenue, which is the gold line, which is my $98 per case, is going to cross the total cost line, and that's where my break-even point is. Then the other bit of information that we can put onto this is, when do I recoup my startup expenses? If you recall, that was the $1,400, around $1,400 that we have to spend to get this business started. So I'm, of course, interested as the business owner. Well, that investment that I made, that initial expenditure, or those expenditures that I made, when do I get that cash back? And this is just a summary here. So my startup was 1,370, and I need to sell 84 units where I gather enough margin to basically cover that. It's an important aspect of this. It's an important point. So a break even is a quick way to get a sense of, whether or not you're going to be able to recoup your initial investment, cover your costs, and generate some positive cash flow. Okay, so now we're just going to talk through some transactions, initial transactions, and then talk about a balance sheet or statement of financial position, which basically is what's the status of the business at any point in time. These are important financial activities. I'm not going to go through, I said I didn't want to do bookkeeping. I'm not going to do journal entries. If people are familiar with that, we're just going to talk about the transactions. So as I'm ready to start this business, and I know that I'm going to incur startup costs of about $1,400, I'm going to need cash. So my first transaction is, as the business owner, I'm contributing $3,000 of cash to the business, and I'm putting it into a separate bank account at my local bank. So when I make that $3,000 contribution, the value of my business, which is equity, is going to increase to $3,000. I have $3,000 in the bank, so my business is worth $3,000. Um, and then shortly thereafter, I'm going to write checks or make payments for my initial investment of inventory and assets, and that's the item number two. That's the 1370, and that would be a reduction in cash as I make those purchases. And then my third transaction is for the first period of time I'm going to make and sell 20 cases. So I'll have sales revenue, and my margin will be negative because not only do I have to cover the variable costs of making these cases, materials and labor, but also I have to cover my fixed expenses. And um, selling 20 cases, as we know from the break even chart that we looked at, does not give us the ability to generate a margin. And as the business is an ongoing activity, I'll have to make uh, purchases to replenish my inventory. And my last transaction is I'm going to buy another $2,500 worth of inventory. As I make and sell 20 cases, I'll have to buy more inventory. And if I look at my balance sheet at the end of these transactions, I have a cash balance. I have inventory balance. I have assets. Those are the same as when I started. They haven't changed. And for those who understand what depreciation is, this is without consideration of depreciation. I have total assets of $2,568, and I have equity of 2,568. Assets generally are uh, depicted as positives, and equity and liabilities are generally depicted as credits or negative numbers. And total assets should equal liabilities plus equity, which in this case it does. So, well, what's happened with our equity? Well, we started with $3,000, and basically we lost $432. So that gets us to the point where now we're looking at an equity position of $2,568. Okay, this is very, very simple. Hopefully, it's something that was easy to follow. In the real world, this would be much more complicated, but the concepts would be similar. The activities would be similar. Um, and our balance sheet would be more complicated, and our financial information would be more complicated. But I think the intention here was to give you an overview and a general idea, and also to see how the transactions of the business impact the financial position of the business, which is the balance sheet. Okay, so what is success for this business? Um, Financial performance is the most important thing, and that's the focus for this session. So we want to make sure we talk enough about that. And a very key aspect to this is you need to keep records and make sure you have a handle on the activity within the business and the transaction. So you got to track your expenses, make sure you distinguish between, what is a business expense or cost versus something that's personal, separate bank accounts, separate cash accounts, separate checking, etc. That's kind of key. Um, and also have a good mechanism to track and keep a record of your sales and sales revenue. Figure out a methodology for how you know what customers might owe you money, how that money is going to get to you through Etsy or whatever else you're using to distribute your products or your services. This obviously is appropriate for a service business as well. Maybe you're selling hours of consulting, or you're selling construction work that you're doing on a home refurbish. Metrics, sales is always a pretty good one. I mean, if you have um, an economic situation within your business where you're going to have a positive margin at whatever level on your financial statement, then tracking sales would be, pretty good. I know that if I sell one phone case, I should generate a margin of about $20 or $28. Sorry. So if I know the number of sales, and I can sort of mentally calculate what the margin is and whether or not that's going to be significant um, for my business to be successful. And again, this is sort of building generally over a period of time. So I may have 1 or 2 months where I'm not selling enough uh, units or enough phone cases to generate a net positive margin and net positive cash flow. But am I tracking and going in the right direction? Maybe it's going to take me 6 months or 9 months or a year to get to the point where my business for a given month is positive. Uh, if it takes me 3 years, it may be a different conclusion. Maybe that's something where I just am not going to have the funding capability to have a business that exists for 3 years without generating positive cash flow. And what's my alternative? I mean, maybe I take my time and effort and focus on something else, or maybe I redefine my business that enables me perhaps to make a profit and positive cash flow, after in a shorter period of time, where it's a period of time where I'm willing to take the risk and I have the financial wherewithal to fund the business for that number of months. Um, Another very important thing in identifying if your business is successful is, what do your customers think? So um, maybe you don't have a lot of repeat business when you're making leather cell phone cases or one model cell phone that's out there, which is an iPhone. So I may not be buying, more than one case for my iPhone 15 until it's time for me to buy a case for my iPhone 16. But customer satisfaction is critical. Do customers feel that they got value for their purchase? Are they happy with the quality? Um, are there things that they would like to see in your product? Maybe that's a little different, or maybe the way your design is set up. All of this feedback is very helpful, and you should make make effort to try to get to the point where you can, gather that feedback. So, let's again throw open here if there's some comments about from the information that's been presented, do we think this cell phone case business is a go or a no go? And we can maybe spend some time on that. Um, so here's some other things where we can identify if our cell phone case business is going to be successful or is successful. Did we achieve the goals and objectives that we set up? We had milestones. We talked about that before, where certain activity levels were going to be completed, as of a certain date, or we're going to have certain cash flow, or we're going to sell so many. We're going to make sure our relationship with Etsy is solid, those kinds of things. So we need to check all that and track our actual results against what we anticipated our progress would be. Not a bad idea to look to see if you can benchmark what you're doing, regardless of industry or product or services, with maybe what your competitors are doing. Some businesses, it's more difficult to do this. Perhaps this cell phone case business might be a difficult one to do, um, because we're really not competing with large companies that are doing this. Uh, this is sort of a kind of a niche sort of a business. But anytime we have the opportunity to look at what our competitors are doing or look at what's going on in our industry and comparing our activity to that, that's always a good thing. So maybe we can figure out some way that other providers of custom cell phone cases, leather cases, maybe their markup or maybe their margins are higher. And that may lead us to consider raising our price, for example, where maybe we're not selling many of these, and the reason that we get for not making sales from potential customers is we're too expensive. So we may want to consider lowering our price. Um, it takes a lot of work. It takes a lot of patience, takes a lot of persistence. This is not the kind of thing, starting a business is not for the faint of heart. It's takes a lot of effort, takes a lot of work, and it's it's not easy. If it was an easy thing to do, everybody would be starting and opening their own business, and certainly in the world, that's not the case. And when we summarize a little bit here, when we look at our business idea and develop whether or not it is feasible, just a couple of things to point out. One is, what's our core competency? Every business has something that they should be really good at. Otherwise, maybe don't even get into the business. And some examples of that are, do you have a business that's just so valuable because it's potentially going to generate a significant amount of revenue? That's not the cell phone case business, but that may be something that provides real security to you. Also, if you're solving a problem that nobody else has been able to solve, maybe this is more in a technology type business, but you have an advantage because you're the only game in town, so to speak. You're the one that has the solution to a commercial problem that customers are looking for the answer to. That's a pretty important competency that is likely to make your business feasible and successful. Um, are you selling something, a product or service that can't be replaced? Nobody else really makes the same thing. Um, Not necessarily the case with our example today, but again, if I'm the only one in town selling that particular product because it's a special design or it does certain things at a really good price value ratio. And then another one, or the last one that we're going to talk about here is it tough to get into this business? So conceptually, this may be a business that requires a significant amount of upfront investment, maybe a manufacturing business that takes a lot of production equipment and a lot of facility to be able to start the business. And you're in a position to fund that or to invest in that. And because of the high level of investment in technology and knowledge, that may be something that, there aren't going to be a lot of competitors because it's really tough to get into this business. And if you have the wherewithal to get into that kind of a business, you're not going to run into lots of competitive situations there. Uh, concept test, this is interacting with customers, try to get your product or services out in the market, even if you do it at some lower pricing. So you can get some feedback, so you can generate results, see what customers think, see if it solves their problem or solves their issue. And, I mentioned here maybe identifying 25 to 30-person target market. Sometimes that's not possible, but try to get that, try to get some of those cell phone cases out to friends or people that you trust so they can sort of give them a shot, give them a chance, see how they work, and get you some feedback on that. Maybe part of the initial, preliminary period. And based upon all of this and based upon the financial estimates that you've done, this is sort of your final go, no go, and that is stop, think. Do you move forward? Do you stop? Do you back up and reevaluate? Maybe the cell phone case made out of leather with individual stitching is not exactly the right thing. Maybe you want to have machining capability do these aspects rather than have it hand tooled and hand stitched. Okay. This is one that I also put up in all of the sessions, and that is just a check off list of what are the factors that make businesses succeed, and what are the things that uh, you can see when businesses fail. And you can read these. The customer is critical. Customer is number one. I mean, it's got to be customer focused. Um, got to control your spending. You've got to make sure that you've got the right experience, and really, it's planning is sort of the key thing here. Um, good planning, good chance to succeed. Poor planning or no focus on planning, likely business failure. Okay, so we're kind of getting to a wrap up point here. I wanted to leave time to see if we had comments and questions. So let me just say this was our fourth and final uh, webinar session on business planning. All of these should now be available on the web. I believe this one take maybe a few days to get it there. So we're open to comments either about this webinar or perhaps about the entire series. If anybody has one, we've got a few minutes to cover some comments or maybe cover some questions. So
I've allowed everyone to speak. So if you have a question, and you can unmute yourself and you can ask your question live, or if you have a question and you want to put it in the chat box, we can monitor it there and answer your question from that point. So either ask it out loud or type it into the chat box. Okay, it doesn't look like we have any questions. If you think of one in the meanwhile, put it in. We're still here, but Neil, if you want to wrap up.
okay, yeah. So I just wanted to mention, besides a lot of material and a lot of resource that's available through our website, and we'll show that again in a second here. But we also have a series of radio transmissions hosted by one of our chapter members, Michael Pappas, on this station They're broadcast initially Saturdays at 9:30, Sundays at 7. That's a little early for me. So you can go to the website and there's a library of these that are kept. So if you wanted to go through and pick a topic that you have some interest in, some of them are very good. I know, I think Tony's done a few, I've done a couple. And of course, those are among the best, but there are others available to you as well. So you should take advantage of that. And it kind of wraps up our session today. There's my email and there's our web information, our website. And if you have interest in becoming a client, if you're looking for some assistance or some mentoring, um, get a hold of me, or you can go again to our webpage and you can follow the process of under finding a mentor. Um, okay, I don't know if there's anything else, or if anybody has anything that they want to raise as a question or a comment. If not, I guess we'll wrap